Good evening to each and everyone and welcome to today's event. We have with us our CIO Mr. Sunil Damania. In today's event, our CIO would be reviewing the result performance of the companies. We have done a couple of webinars on the result season and today is the finale, the final verdict on India Inc. You can ask any questions you may have in the chat box just below the video. Over to you, Mr. Sunil.
Thanks a lot, Jason, and very warm welcome all of you. So normally, the March result are a very significant result for India Inc. Reason is very simple. Normally, India Inc. reports highest top line and the bottom line for March quarter. And one of the reason is that a lot of people have set targets and they want to achieve their targets by year end. Second thing, PSUs, normally they tend to perform much better in the last quarter as compared to the previous 3 quarters. Now, what I've realized this while, and sometimes, we don't realize how good or bad the performance has been. Am I right? But when I look at the numbers, and it did surprise me this time, that India Inc. net profit numbers are much better than the normal 2019 number. Why am I talking about 2019? For the very simple reason, because 2020 was disturbed year, 2021 was also a disturbed year. Of course, we had a challenge in 2022 also, and despite that, the second and the third wave, India Inc. in a year as a whole has done extremely well. So let me just, and in fact, I would request all of you to please listen very carefully. Some of the data points that I'm going to share with you are really eye-opener. When I compiled the data, even I was surprised, despite I take markets so closely, but what has really come out is a big surprise to me in terms of this. And that's one of the reasons I believe market cannot ignore these numbers for a longer period of time. So let me start my presentation with a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indication for the future returns. So let me start. As a normal habit, we always tell you what we predicted last time on the same topic. And it's good to cross-check whether what we suggested has really come true or not. And that gives an idea how seriously you should take our prediction for June quarter. So what I suggested, what I predicted for March quarter, crude oil price continue to rise and it will impact input costs. And that's exactly what has happened for the quarter ended March. And as I speak to you, the crude is trading at $122 per barrel. Now that's happened. So whatever I've done, where our prediction has gone right, I have put in a green. Where we have gone neither right nor wrong, or half right, half wrong, I have put in a amber color, and where we have gone completely wrong, I have highlighted in a red font. I have suggested overall inflation in the economy will remain high despite the RBI suggesting otherwise. If you remember, we did the presentation post-Feb monetary policy, and RBI did indicate that rate of interest or the inflation will remain lower level, less than 5%. I did not agree at that point of time, and correctly so, because inflation did move up and RBI been forced to revise its inflation target now to 6.7% for FY 2023. So we can take a credit for that. Number 3, I suggested diesel and petrol prices will increase post the assembly election, as currently they are not moving along with the crude oil prices. One of the reasons was the government did not want it to impact its vote bank. Price did move up, but what came as a big relief, which, to be very frank with you, we did not envisage, is that cut in the price of petrol and diesel due to a cut in the excise duty. But having said that, oil marketing companies continues to bleed. Why? Because there is an under recovery as we speak. I suggested that Omicron has turned cautious. The mood in the market has turned little cautious because of Omicron. which is evident in January and slowdown in consumption. Omicron did impact, but business not so much. So while people, India Inc. knew how to navigate what we call Omicron issue, and it was a milder version of what we saw the second wave. The third wave was little milder as compared to the second, this one. But slowdown in the consumption is a fact of the life. Rural economy is not doing well, and it could impact sectors depending on rural growth. And we all know that rural continues to struggle. Even RBI recent monetary policy mentioned that the recovery has been gradual. There is no strong rebound, and a lot will depend upon how the monsoon is going to perform. In my prediction for March quarter, I also suggested FMCG companies will report poor performance, that is financial performance, due to higher input cost and softer demand. We all know that FMCG companies are able to report top line growth mainly because of price, not because of volume. Volume, there has been a degrowth. And overall net profit of FMCG declined for the quarter ended March 2022 versus December 2021. We did also mention that companies from cement should do well, and it did. Pharma will continue to underperform, and it did. Banks will report better numbers, and private sector banks did well, but not the public sector banks. And non-ferrous metals should report better numbers, which has been the case with Hindalco, Nalco, and Vedanta. But now the concerns have emerged because of softer demand outlook going forward. Now that's what I predicted last time and what has actually happened. So that gives you a little bit of, we rewinded what we suggested last time in Feb 2022 and what actually happened. So you can understand, because I'm going to make very similar prediction for the quarter ended June, what we should expect from India Inc. for quarter ended June. But let's look at what happened to the March 2022. So what I've done, I've divided the India Inc. into three parts: large, mid, and small cap. And if you look at it, yeah, let me, highlighter. So if you look at it, the large cap only 57.01 has reported positive CFT versus 57.8 of December 2021. So what has happened? The positive CFT score declined and negative CFT score increased. Can you see this? Which is not a very good sign. Okay. So is the case with mid cap. Similar trend we observed in both the cases. It has marginally declined and this increase, negative increase. So that's another thing. But if you look at the small cap, also very similar kind of. 55 coming down to 52 and 19 increasing to 25. What does this indicate? That to some extent, the quality of India Inc. numbers are not as good as what it was there for December 2021. So that's a fact of the life. But when you look at overall numbers, it does give the indication that India Inc. grew by 16.1% quarter on quarter, which is extremely good, and Y on Y of 29.4%. Now, why am I so happy with this number? I'll be very upfront with you. See, we should always evaluate under what circumstances these numbers have come. These numbers have come when Russia declared war on Ukraine in Feb 2022. Crude oil prices are surging. Ferrous and non-ferrous metal prices were surging. Higher inflation, Omicron-related issue, and yet India Inc. did brilliantly well. So I think a lot of credit should go to India Inc. And one of the reasons why I'm time and again suggesting that Indian equity markets should do extremely well, purely because I do believe that India Inc. will do extremely well going forward. And I'll show you some data, interesting data in my presentation, which also came as a big surprise to me. Now let's look at with these numbers what has been reported. Is it very lopsided growth? And if it is lopsided growth, then it cannot sustain. Am I right? A growth which is more sustainable is only when it is well spread. Okay. So what I've done actually, I've looked at sector wise. How many sectors have reported a growth in terms of quarter on quarter and a Y on Y. So if you look at it, sales growth has been good. Most of the sector have reported sales growth quarter on quarter as well as Y on Y. And something similar happened with the net profit growth. Only thing is that quarter on quarter, the growth has been higher as compared to this one. So there's some kind of this one. So overall, it does gives an indication that more or less India Inc. did very well. And this is not function of one or two sectors that did well. I think many sectors participated that. I would have ideally have preferred that more sector would have seen gain versus the degrowth. But anyway, the fact of the life is that it has done well. Which is did extremely well. The highest growth in absolute value over December came from engineering, followed by power generation and supply, IT software, private sector banks. I was talking about cement. If you look at cement, it's 2,536 crore. So that's also true. Steel did extremely well, okay, and so forth. Sugar also did well with 781 crore. It's a seasonal business, but under it did well. When you look at percentage growth, I think sugar did extremely well. Engineering did extremely well. Auto ancillaries for a change did well. Pharmaceutical multinational did well, but not so overall pharmaceutical industry as a whole actually. When you look at the degrowth, pharma, which I was suggested in the beginning, I predicted last time, majorly down, 5,900. Finance, NBFCs is down by 5,011. E-commerce, because of Zomato, which got the benefit, it did not well. Air transport service continues to repair because of higher ATF. So despite more and more people are traveling, it's not making money, isn't it? And then we saw retail not doing well, gas distribution not doing well, so on and so forth. In terms of the degrowth in terms of percentage, air transport, so on and so forth. So basically, the sector that open up, they were supposed to get the benefit of unlocking, like quick service restaurant and so on and so forth. It has not percolated out in the terms of their bottom line. Why? While the demand is good, the cost has gone up and somehow they are not able to pass on 100% cost to the end customers and resulting into a lower net profit growth. In terms of company, 1088 companies have reported quarter on quarter growth and 1157 companies in terms of Y on Y. Now you may think, and 850 companies reported degrowth. Now you may think, are we talking only about 2,000 companies? So what we have done, we have just put a filter. The company which are a little smaller in size, I did not want it to put it because sometimes, because of the smaller size companies, sometimes the trend looks a little different. So I basically removed the small size companies just to focus on the companies whose performance matters to the India Inc. And this company accounts for almost 98% of India Inc. market cap. Okay, just to give in color on this one. So more companies reported quarter on quarter growth, both quarter wise and also in Y on Y basis. Which are the top 15 companies for quarter ended March in terms of net profit? Reliance continues to be the top of the list, followed by ONGC. The difference between HDFC Bank and ONGC has declined, and ONGC profit has declined. So is the case with HDFC Bank. TCS has gone up and very close. The way TCS is performing and the way HDFC Bank is performing, I do get a sense that maybe TCS may become in number 2 in terms of net profit after Reliance Industries. So Reliance is anyway the most valuable company, followed by TCS. Tata still did extremely well. I'm not very sure they will be able to repeat this performance for the June quarter because we all know prices have taken a beating. And then, so list has been more dominated by banks. If you look at HDFC Bank, State Bank of India, ICICI Bank, and so on. And Hinduja Global, it's a more outlier year for the very simple reason because of they sold the healthcare service business, and that's other income really help it. And there was some other income element even with Adani Power where it has gone up by 2026 crore. Okay, so this is what the and total in top 15 companies accounts for 37% of India Inc. That 80-20 rule is more applicable also in the India Inc. So for some reason, if these 15 companies don't report well, there is a high probability that overall India Inc. numbers will go down. And out of top 15 companies, 5 companies reported degrowth. And out of top 5, top 3 companies reported degrowth quarter on quarter in terms of the profitability. In fact, I must tell you this quarter there are many places there are exceptional items that has happened. So sometimes it was a losses, sometimes a profit, we don't know. Okay, which company did extremely well? Bharti Airtel profit went up by 142% quarter on quarter. This is Nifty 50 companies. SBI Life did well, HDFC Life did well, Maruti for a change did well, Larsen & Toubro did well, Grasim did well, Ultratech did well. And see, the Grasim did well because Ultratech did well. Why? It's a holding company for this one. And some of the companies which did not do well in Nifty 50, Sun Pharma, huge write-off that they had this Taro, well, they have actually neither they admitted nor they have accepted the guilt, but they did the settlement, and which basically resulted into this one. Dr. Reddy suffered very badly. Profits came down. Apollo Hospital down 61%. Cipla. So pharma as a segment continues to remain underperformed. If you remember, which I showed in my previous slide, March quarter I had predicted that they will do miserably bad, and that's what they done. Sun Pharma, Dr. Reddy, Cipla, they are all from pharmaceutical industry. What has also happened is that some of this company which always been known for reporting growth, like Titan, like Asian Paints, they have seen decline in their net profit over December 2000. Titan had to face a problem because of Omicron, where not many people could visit the store, number one, and number two, the footfall decreased, and second thing, the higher prices of gold did impact to some extent the demand for them. Asian Paints, very clear-cut case of a not able to pass on the higher input cost. And Divi's Lab also profit decline, which we have predicted that also, because when we closed stock of the month for Divi's Lab, we had predicted that Divi's Lab performance going forward will not be so great, and hence the kind of valuation this company is commanding will not be able to sustain. But overall 51 companies within the Nifty 50 reported quarter on quarter growth. Only 19 companies reported degrowth quarter on quarter. So overall the numbers are good, this one. I represent this graph only to showcase you whether the growth in the India Inc. is well spread or is driven by only large cap companies. So what I do normally, I look at Nifty 50 companies and see what percentage of net profit of India Inc. comes from the Nifty 50 companies. So it has been 63% in March 2021, which increased to 65 in June, then it started declining. September 58, December 58, and for March it's only 54. What does this indicate is that small and mid cap companies have done reasonably well vis-a-vis the large cap companies. Which are the most profitable sector for the March? IT software is the most profitable, accounts for almost 1/6 of India Inc. profit, followed by power and generation distribution purely because of shortage of power and so on. So engineering 12, auto and 10. Normally banks is the forefront, but this time bank is go down and it's only accounts for 9% of total India Inc. net profit for the quarter ended March. Cement is 6 and steel is 10. There is a high probability that steel will come down going forward. Why? Because of softness in the steel prices across the world. This is another interesting data that we did, and you look at it, how India Inc. net profit is increasing. EBITDA, that is earning before interest, and how India Inc. interest cost is increasing. In fact, while India Inc. net profit increase, the interest cost decrease, if you can see this. Am I right? So it's a very good scenario to have. and interest to EBITDA ratio, which was 37 for December 2021, has come down to 26. Of course, the rate of interest are started inching up, and we need to wait and watch whether this gets corrected or not. Based on last 4 quarters, trailing 12 months, India Inc. P is at 23 times. And if you look at FY 2024, the India Inc. trading is about 19 times or so. It is expensive, but not so expensive. And if you look at the another good thing about this data, that June numbers say September is better, September say December is better, and December say March is better. I think there's a constant growth that we have seen in India Inc. profit. But what is very interesting, that what I've realized is that India Inc. net profit, now you would see some numbers variation from here, 1044 versus 1113, because of, I was explaining you, India Inc. I have taken even the December 2021 numbers. So it would not exactly tell you. Why it will not tell you? Because some companies have an accounting year for December 2021, some of the MNCs. So I have taken that. Now you look at this profit figure, 11 lakh crore. In normal year of FY 2029, it was only 537. In other words, India Inc. net profit is more than double in FY 2022, despite we had second wave and we have third wave in FY 2021. That clearly gives us an idea how India Inc. has become very trim and fit and is able to report growth. I think these numbers are, when you look at as a period of 5 years, you get an idea how India Inc. smartly increased. And one of the reasons I believe that by October 2022, India Inc. should do very well, purely because of the growth in the bottom line. Even FIS can't afford to ignore this growth in the bottom line. It's a marvelous number that India Inc. has reported for the year. This is for the full year I'm talking about. This data is for the full year. And very excellent numbers that India Inc. If I'm not making a mistake, of course, to some extent, I must clarify that some of the growth is also because of some new companies got listed, whose numbers also get accounted in these numbers. But doubling is a fantastic number, am I right? And I think that's what market is going to love it, and that's why more and more investors will come. Even FII, when they start looking at these numbers, they will get convinced that why they should be putting and parking more funds into India Inc. since they are doing extremely well. So I think what gives me a great, and in fact, to be very frank, even these numbers came as a surprise to me. So when I was compiling this data, I had to double check this data. बोला ये number सही हो सकता है क्या? But then actually this number is right, and that's a smart growth that we have been able to see. If you look at the interest cost as a scenario, I think this is the second quarter in a row India Inc. interest cost has come down, financial year, sorry. Second financial year in a row, India Inc. interest cost has come down. It was 334 lakh crore. This does not include banks and NBFC's interest, which came down to 3.23, and it further came down to 3.16. So it's a very good numbers. So on one hand, our profits are increasing. On the other hand, the interest costs are decreasing. Of course, this trend to some extent will get reversed. Why? Because RBI is doing it. But overall, India Inc. did a very well. So just to summarize what India Inc. did, because before I move to June numbers prediction, I think India Inc. did extremely well. Earnings growth has been well spread. Based on our IP, fewer companies reported CFT score, but otherwise overall it's a good numbers. Banks did well overall, improving their NPA numbers, and NPA struggle, FMCG companies struggle to report growth. What should we expect for June quarter? Definitely high crude oil prices. That's definitely going to increase hurt the input cost. Inflation will remain high despite higher interest rate from RBI. But however, by August, I think the trend will start reversing a little bit. Okay, softer demand outlook from real economy will impact even for the June quarter FMCG companies and consumer durable companies. And I have been looking at some data point which gives me an impression that the sales growth for the consumer durable companies, even during the summertime, has not been so good for the refrigerator, air conditioner, and the fan. So I think that's going to reflect in the June quarter numbers. So today, our main merchandise export has been very, very good. Am I right? I do believe that merchandise exports of India would take a beating. Why it would take a beating? Because of slowing economic growth. Target has having more inventory, Walmart having more inventory. In other words, they are going to slow down their purchases, which will impact India. Second thing, Chinese yuan has come down, decreased by 6% in last 1 month or so, while rupee is not depressed so much. So what would happen, even India's competitiveness in the international market will take some beating. Several management has predicted some numbers, some targets for March 2022, for June 2022, post-March 2022 numbers. I suspect they will have to revise their projections downward. Why? Because global economy is slowing down, rate of interest are increasing faster than anyone would have imagined, and that would create some kind of a headwinds for India Inc. We do expect rupee to go down to 80 rupees by August 2022. I again repeat, some of you people keep asking us what is our view on rupee. So this is what our view, that we may touch 80 rupees by August 2022. Our capex cycle will take a back seat. I must tell you that. So whatever the order inflow that we are going to see, order book inflow, I think that's going to slow down. Why? Because of slowdown in the global economy, and that means your capacity is higher, demand is not there, and the higher cost of borrowings. Both these are not good for the capex cycle. One good thing which will happen is that many corporates had a very severe pressure of input cost pressure. Now many, whether it's a chemical, whether it's an industrial metal, the prices have started softening. And India Inc. is not going to pass on that lower cost to the consumer. Why? Because they have taken the brunt of higher input cost. So now they will try to retain some of this lower input cost to help them to improve the margins. So that's what happened. And I think one worrisome factor that I'll be watching very closely, which would have an impact on consumer durable demand and real estate, is that many startups have started laying off. They're asking staff to move. Why? Because the funding has dried up. This could create some demand pressure. So overall, I think India Inc. Would report a growth, but of course, why I'm saying so report a growth, because the GST numbers are good, but growth would not be as high as what we saw for the quarter ended March. I'm talking about Y on Y growth, because it doesn't make sense to compare quarter on quarter, because June is normally a weak quarter compared to the March quarter. With this, let me tell you that we are celebrating our 7th anniversary, and I have a very beautiful offer for all of you. Only for 14,999, you get 2 years plus additional 3 months. So my request to all of you is that please avail this offer immediately, which works out to about 550 rupees per month, less than 20 rupees per day, which is less than a cost of a tea or coffee, whatever you like it. I'll request my colleague Jason to please drop the link, and let's open the floor for question and answer. Over to you, Jason.
Okay, picking his first question by Mr. Prince, he says, my assessment is on oil companies like Oil India, ONGC and GAIL. They are relatively safer bets right now. Sunil Ji, do you agree with this thinking?
You are very much right, sir. So we do have ONGC and Oil India as a part of our model portfolio also. GAIL is also our mojo stock, not the mojo stock, but we do own this company in our model portfolio. The score of all 3 companies are buy in our systems. I buy your argument, sir.
Okay. Yes, this next question by Mr. Milind. He's asked, dear Sunil, if I request for deploying funds as per Infinity Soul members, as per their choice, if on any of the day of the market, it cracks nearly by 2-3%. What do you think about this?
No, Milinji. If we do that, then what would happen? Everyone will take a call on their own. Uh, so you are on the extreme side. There are other people who don't want to invest only. They want to time the market. So what we are saying is that follow discipline. Don't bring your human emotions, because sometimes you may go right, but many times you will go wrong. So please follow in a disciplined manner. Please follow the way we have defined: one third, one third, one third. We will prepone if the fall is more than 10% in the benchmark. Otherwise, so sir, your suggestion is good, but let's not try to go in that direction, because then it will defeat the purpose, and hence I would not recommend to go in that direction.
Okay, this next question by Mr. Suresh. I think Marcus Mudal should suggest to buy more stable stocks in our model portfolios in volatile times. Instead, what I've observed is that we have restored to relentless loss booking in the last 2.5 months. This has also resulted in the erosion of capital.
Perfect, sir. So this is as a part of our strategy, sir. Yes, when we recommend a stock, we do believe that this company will remain stable. But market has been extremely choppy, sir. And hence, if we realize this company is going to underperform, you might as well book losses. 80% of the company that we have asked you to exit, have further gone down. Then how does it make a sense to hold on to that company? So yes, and see, please bear, I must tell you upfront, this kind of pain will be there till August, September. Post-October, market will start doing extremely well. So yes, we are asking you to book losses. It's a part of our strategy. There is nothing wrong with that. So please remain calm and composed and follow our advice in a very disciplined manner.
Okay, some news coming in. Mr. Chaitanya says there is an announcement on TV channels that June 22 quarter advance tax collection is higher by 55% year on year. This is an excellent news. Overall, we should make 30 to 35% growth in tax collection for FY23. Where will Nifty go? Is 20,000 possible now?
So sir, I don't know when it will touch 20,000. I did predict the Nifty level for April 2027. And I'm extremely bullish on Indian equity market. That's why I keep saying, see, India would be the bright and the shining star in the world in terms of economic growth, in terms of capital appreciation in the equity market, because of good demographic dividend, smarter India Inc. performance. FIIs will come back because India would be the bright shining star in the world. And the reform that is happening, this PLI, I think people are not realizing what change it will do to India Inc. economy. I think the production link incentive scheme is a beautiful, which will help more people coming to India, setting up factories, more employment, more consumption, and is going to create a virtuous cycle to create a lot of wealth. I fully agree with you, but I don't want to put now numbers and say when Nifty 50 will touch 20,000. The moment I make one statement, then every webinar, you people keep asking me, yeah, abhi bhi hoga, and I may have said after a couple of months or couple of quarters, but people will keep asking me, so I don't want to go that. So I'm extremely bullish, and I do believe Nifty will touch Nifty at 20,000. But before it touches Nifty 20,000, I do expect Nifty to, before touch 20,000, it will touch 15 to 15,500. I continue to believe that, and that will happen in next couple of months.
Okay, this next question by Mr. Vineet. Is there any specific reason Nifty 50 stocks are having a good growth and profits, but I've not seen them part of the Muzo stock list in large cap?
So sir, as you know that we pick up companies not because they are part of Nifty 50 or something. We pick up companies purely because of their growth potential. If the company is not going to make money, why should you have that company, Nifty 50 company, in the portfolio like Maruti or Hero MotoCorp and so on and so forth? So we pick only those companies which we believe will do well. If they happen to be Nifty 50, fine. So if you look at, as of today, we would have never 34, 35 Mojo stocks. 14 or so are from the large cap that we have. But you are right, there are very few Nifty 50 companies which are there. But why you should, because ultimately you are here to create wealth. Whether that wealth comes from other than Nifty 50 companies, how does it matter to you? It shouldn't matter to you, am I right?
Okay, I'll pick this next question by Mr. MD Yahya. He says, if inflation is high, cost of goods have increased. Does it not help to show good GST numbers in that case?
Yes, it does. But sir, somewhere it should be counterproductive, isn't it? The volume should go down, which has happened with FMCG and the consumer durable companies. But you are right in terms of observation. If the inflation is high, but having said that, which is very difficult to make a statement that if inflation keep rising higher and higher, GST collection will keep rising. It will not happen. Sometime the economy will slow down, and that will reflect in the GST numbers that we are collecting.
Okay, this next question by Mr. Atish. Will oil price sustain over $100 per barrel? What's your opinion?
It can sustain till September, October, and post September, October, I do believe that crude oil prices will start softening and may go below $100 per barrel. See, if you look at historically, $100 per barrel never been sustained for a crude for a longer period of time. It did, I think, from 2011 to 2014 or so, but it was less volatile. It remained $100, but it remained just little above $100 for a very significant. There was not much of a volatility. Right now, crude is so volatile, I tend to believe that crude may go below $100 per barrel by October 2022 or so.
Okay, moving to this next question by Mr. Bangaria. I think he contradicts with your opinion. He says it is expected that crude oil may reach $150, inflation may continue for a year, and there is uncertainty of ending of war. GST collections is not reflecting unorganized sector. Then what is the rationality of revivals of market by September, October as predicted by you?
So, sir, there are always opinion and there are a counter opinion, am I right? Who knows, you may be right and I may prove to be wrong. The reason I believe that market will revive by October 2022 is for the very simple reason. Number one, I do believe crude will soften. I do believe FIIs will come back very strongly. If the monsoon is good, it will revive the consumption in the rural economy. And last but not the least, the valuation of India Inc. If this kind of performance sustains, very difficult equity market not to go up. Our net profit is much higher than what it was there in 2019 numbers. So you can imagine the kind of the progress India Inc. did when. So there is a very famous saying, when the going gets tough, tough gets going. And I think that's what exactly India Inc. has basically showcased by reporting a smarter growth in the bottom line.
Okay, also I can see a lot of investors who are actually dropping this particular thing in the chat box regarding the FOMC meet today. They want to know your opinion, what do you predict about it, and could you provide some opinion?
So, if you remember the live FOMC meeting, I predicted that Fed will hike 70 bips rate hike, if you remember that. So I think that seems to be going to come true. Today we'll come to know. But having said that, there is a high probability that even the next, that is in July, FOMC meet, we might see 75 bips rate hike. So what I'm going to do tomorrow, I'm doing an exclusive webinar only on Fed policy action and impact of the same on Indian economy. Tomorrow at 7:30, am I right, Jason?
Yeah.
Yeah, 7:30 tomorrow. Please come and join, and I'll take you through what Fed policy action means for Indian equity market.
Okay, I'll pick this one question by Mr. Saurabh. We have fallen less as compared to US. So is it possible that we may fall more in the coming months?
No, sir. If you remember, we had predicted this in 2022 beginning. And at that point of time also, I suggested Indian equity market, even in dollar terms, will outperform the US market. Some of you people wanted to invest in some of this Nasdaq ETF, and I strictly advised against it. We continue to believe that, sir, आप जो logic बोल रहे हो ना, it sounds proper, logical, but that's not the way market works. So we continue to believe that Indian equity market will do well vis-a-vis the US. US will can go to the hard landing because of tightening of interest rate cycle, while India would continue to grow anywhere between 7 to 8%. So I believe that Indian equity market will do well as compared to the US market.
Okay, there's one particular request by Mr. Jadhav. He's dropped it a couple of times in the chat box. He's asked, can we extend the 7th anniversary offer till month end? Would like to extend post 10 to 15 days.
Sir, very difficult to say. We have not taken a call, to be very frank with you. So even I don't have visibility how long we will continue with our 7th anniversary offer. Do we continue for 1 week? Do we continue for next 3 days? Or do we continue for 15 days? So we'll look at it. Right now we don't know. So I can't promise you. If it is available at that point of time, please avail it. Otherwise, I would request you to avail now. So we don't know whether it's available or not. If it's available at that point of time, you may exercise your rights option to go for 14,999 for 27 months. If post this offer, the price on a webinar will go to 19,999 only for 2 years. The 3 months extra will go away, and you will be asked to pay additional 5,000. So you take a call what you wish to do.
Okay, moving on this next particular question. This is by Mamta. She says, Sunil Bhai, I hold model portfolio and keep adding every month. What is happening is that for additional money, it keeps asking me to add to only 2-3 stocks and not add to the rest. This has been creating a skewed portfolio with losses. This also could be counterproductive. Are you planning to be more proportional with additional investment going forward?
Mamta ji, no. We will continue to follow this because we have tested this IP and it does give us a feeling that it should do well. So sometimes, we should not change our strategy because it's underperforming for a short period of time. And hence, no, we will do that. The reason why we ask you disproportionate in few companies because our IP suggests that those companies, if you invest, it would be beneficial for your portfolio. That's the reason we are doing that. In short term, sometimes, strategy doesn't work the way we want it to work. That doesn't mean the strategy is wrong. I always say if your process is right, in the short term, outcome could be bad and it's just a bad luck. But in the long run, outcome has to be good because your process is right and we will follow this process only.
Okay, this one question by Mr. Pritijit. He's asked, sir, can we now invest in Nasdaq 100 ETF? It is down by almost 35% from high.
Sir, I do believe that there will be more pain before we can become an investment case for Nasdaq. I believe it will underperform even going forward. So my answer is no to you.
Okay, this one question by Mr. Gunabal. He says, with decrease in rupee value, will IT aid in bottom line for these companies? Why are IT stocks still falling continuously?
You're right, sir. I think the concern that everyone is having is attrition rate. And if you look at when Indian IT index has fallen exactly the same way Nasdaq has fallen. So that's also a sentiment related. Now falling rupee will benefit but not immediately because many of these companies have hedged their dollar rate and hence they will not get the benefit. So they will get the benefit post maybe September numbers or so. So I suggested two things. There are tailwinds for the IT sector. Number one, they all are cash rich companies, so they will earn more interest on the treasury, and number one, rupee depreciation. Both will work as a tailwind, but immediately they are not going to perform. So in the short run, they will continue to underperform. And also one more thing, what I'm realizing is that a lot of these new startups, they're asking people to go. That will also create some amount of the imbalance that we have seen between demand and supply will go in the favor of supply, and which will also help to reduce the attrition rate and also the employee cost as a percentage of sales. That numbers can also further come down.
Okay, this one question, Mr. Rao, and I think apart from Mr. Rao, a lot of investors are asking this. They want your personal opinion. What's your views on textile sector in the near future?
So those who are focused on exports, I think they will not do well. As I was saying in my presentation, that merchandise exports will come down. 15 or 16 months in a row, we have seen growth in that merchandise exports. I think that will come down. And if you happen to listen to the Target commentary or Walmart commentary, they did indicate that they have a more inventory. That means, and that's the demand from the retail has come down. So that will take some beating. So those who are focused on exports, I think they will not do well. And plus the cotton price, even though it started coming down a little bit, it continues to trade at the premium. So that input cost pressure is definitely going to be there. So थोड़ा wait करना पड़ेगा. I don't think it's going to do well.
Okay, this one question, I think we're finally seeing this particular term come in our Q&A session. It's by Sharon. She says, crypto is melting. What's your thoughts now?
Oh, after many months, Jason, we are getting a question on crypto. Otherwise, in September, October, you people were asking crypto after crypto. Karne ka, nahi karne ka. If you remember, and that time also we suggested that crypto is not going to, it doesn't make sense to invest. Be careful. We advise you, caution. I don't invest a single rupee in crypto. And those who listen to us would be feeling really happy about it, isn't it? Why? Because crypto did go down substantially. And we continue to believe that the crypto will continue to go down. So don't try to catch falling knife, otherwise you will hurt yourself very badly. Please stay away from crypto.
This next question by Mr. Raj. Mr. Sunil, can the socio-political scenario impact the stability of markets? Any risks on this count?
So can you elaborate what do you mean by socio-political risk? Because I'm not very sure you are referring to what actually. Right now I don't see any danger based on what is happening in India or what is happening in the outside India. Of course, there is one fear that China may attack Taiwan. I don't see that as also a possibility, but you never know what can happen. But right now I don't see any this. And if you remember, Goldman Sachs reduced China's GDP growth to 4%. So I don't know whether Chinese would be very keen to do this kind of stuff, which can further deteriorate their growth prospects.
Okay, this next question by Mr. Ajay. Two stocks which were once strong buy and then buy, currently at sell, but they are still in my portfolio. They are very low from my purchase price. However, if I should I continue to hold these stocks as I believe that they will turn around? What's your comment? I want to hold these as I'm influenced by your personal decision about VA Tech Wabag for your own portfolio. The two stocks are CCL Products and Praj Industries. I need your opinion.
Which is the Praj and?
CCL Products.
Sir, please move out. If it says sell on our site, please get out of those companies because very simple reason, follow in IP in a disciplined manner. Because we always told you that ultimately see there is no guarantee that if you hold one company for a long term, you will always make money. Am I right? And we have seen many companies like Larsen and Toubro, Maruti, Hero MotoCorp. You hold for a long period of time and you still did not make money. So even if that applies to the bluest of the blue chip company, तो ये सोचे मत कि and purchase cost should never be the consideration to decide exit. I keep telling investors time and again, never ever make your purchase price as an anchor price. Sometimes booking profit is a good strategy, isn't it? If you are making good money, might as well lock in the profit. Otherwise, that profit will evaporate. And I know many investors who invested in Vakrangi at a very low price. They did not get out at the right price and they burned their fingers very badly. Something similar happened with PC Jewelers. Something similar happened with 1% beverages. Something similar happened with DHFL. So, where you are making money, please use this as an opportunity. Never ever make purchase price an anchor price. For you to get out of a company because of its poor performance, whether you should continue to hold or not, is a function of whether the company is going to do well or not is a function of what is the purchase price.
Okay, we've got this one particular complaint by one of the investors, Mr. Surendra, और उसने actually ये question हिंदी में पूछा है. Sir, क्या कारण है कि आपको काफ़ी बार निवेदन करने के बाद भी आप हिंदी में वेबिनार नहीं करते हो?
सर आप लोग आते नहीं हो. मैं एक दो आदमी के लिए के तो वेबिनार कर दे सकता हूँ हिंदी में. जब हमने हिंदी में वेबिनार किया था तो गिने चुने कुछ 20-15 आदमी आ गए थे. अभी 20-15 आदमी के लिए वेबिनार करना भी कोई सही बात तो है नहीं. तो हम चाहते अगर आप हमें गारंटी दे दो कि आप 1000 आदमी लेके आओगे हिंदी के वेबिनार के लिए, मैं बहुत खुशी करूँगा वेबिनार आपके लिए. बट आप लोग आते ही नहीं हो तो तकलीफ वहाँ पे, दिक्कत वहाँ पे है मेरे भाई.
Okay, this one particular question by Mr. Vineet. He's asked your views on few stocks. I'll just read out their names. One is Bosch, Techno Electric Engineering, AstraZeneca, GlaxoSmithKline and Pfizer, as well as Apar Industries.
Sir, Vinitji, please go to our website, decide based on the score of the company. I don't have in my personal opinion any of these companies. So I don't check them very closely, and hence I will go with what is available on the Markets Mojo in terms of the score.
Okay, I'll pick this one particular question by Mr. Raj. He says, has LIC bottomed out? Can I now buy LIC at current market price?
My answer is no, sir. There could be. So if you remember, we advise you not to go with LIC IPO, and rightly so. We do expect there could be more pressure on LIC in terms of, this is my personal opinion, not Markets Mojo opinion, and hence I don't think you need to do bottom fishing in LIC.
This next question by Mr. Malulan. He says, hello sir, quite surprised at your sell call on Nalco. You were upbeat a week back. How did this change much in a week?
Oh, that's a very good question. In fact, I thought I would address this question. So what has happened, there are a couple of things which basically made us rethink. So we are one, we always remain nimble-footed. If we think things are going not the way we want it to go, we will change our view on that company. So what happened with Nalco, I'll tell you. The inflation in the US came out much higher than what was believed by the market. Germany and the European ECB came out with the statement that they are going to hike the rate of interest from July. Chinese economy opened up because of the zero COVID policy, and further there are restrictions because more infection happened. Now all this means is what? That world economy is going to slow down. And if the world economy is going to slow down, it's very obvious industrial commodity will take a beating. And if that is so, why should we continue to remain invested in Nalco? Now, one other question that people have not asked, but let me also preempt that. Okay, then why did you not recommend sell at the time? Say at the same time, Hindalco was recommended sell. The reason is very obvious, sir. Hindalco we recommended exit because it has a higher borrowing cost, which is not the case with Nalco. And when the rate of interest goes up, Hindalco will get impact. And of course, they've announced a huge capex. For that, they will borrow money, which will further drain on their profitability. Hindalco has a more revenue come from the Novelis, which is a company which is based out of US, selling rolled products, which is not the case with Nalco. So even though they both come from the same sector, but the business model is a little different. And hence, when we advise Hindalco, because at that point of time, we believe Hindalco will underperform. And the reason we exited Nalco now, because now we have a different reasons to recommend exit, because Nalco doesn't have any borrowing costs, and hence I cannot attribute what I could attribute to the Hindalco. So that's the reason we recommended Hindalco first and Nalco a little later. As I told you, we don't have any love or hate for any company. If we believe this company is going to underperform, it makes a lot of sense to move out of that company, create liquidity to invest in another company.
Okay, I think after your statement about exports, being away from export companies, few of the Infinity investors are a bit worried. They hold a particular company which is involved in exports. I won't take the name, I think you must have got it. So, any opinion on that, sir?
See, again, many times I've said, when I make a statement on a sector, there could always be an exception. When I did FMCG, I did mention that ITC is an exception. The same way, so Markets Watch has no view on sector or company. We follow bottom-up approach. And based on that bottom-up approach, we will decide which company should be a part of the portfolio or not. For some reason, if that company start deteriorating in terms of this one, our IP suggests that this company will underperform, we will advise you exit from the same. It's our promise, we will advise you exit.
Okay, I'll pick this next question by Mr. Anil. Could you provide your view on the future of Reddington India?
So Reddington India, I think it's struggling in terms of the price performance for quite some time now. We have exited from our model portfolio in this one. My advice would be to just move out of that Reddington India and reinvest that amount in any of the Mojo stock.
Okay, this next question actually a particular suggestion by Mr. Digvijay. He says, why don't you start multi-bagger for the month covering small caps? rather than stock of the month, I don't think there's substantial wealth creation while following stock of the month, considering the time period we have to stay invested to see some gains. What's your opinion?
Okay, so this is a myth. Let me explain you why. Coromandel International, we recommended in May 2022, stock of the month. It's up by 6%. Bharat Dynamics, we had recommended in the month of April. It's up by 12.5%. And Oil India, which we recommended in March, it's up by 11.45%. Last three calls, and of course I'm not talking about the latest one because it's hardly any time. They all gone up. They've all gone up. Two are in double digits, one in single digit. This is a time when the market has been extremely choppy. So, what do you want? I don't understand. Basically, double digit returns. Okay, tell me one thing. Which company that you bought on your own, which is up by double digit in last 3 months? Not a single company, I can tell you that. Am I right? So here someone is picking up a company which is, so it has worked in a short term also. Yes, there are some companies we have gone wrong, we do admit. But most of the time, the stock of the month has created wealth. But our memory will always remember, well, we have gone wrong, but we'll never remember when we have gone right. That's what happens because market sentiment, sometimes the facts are stranger than the fiction, actually.
Okay, moving on to this next particular question by Mr. Binoy. He's asked if you have any views on pharma stocks.
Sir, we continue to believe that pharma will continue to underperform. There are headwinds which have not gone away. When I discuss about December 2021 numbers, I did mention that pharma companies will not do well for March quarter, and that exactly what has happened. Something similar we should expect even for the June quarter. So I'm not bullish on pharma. This is my personal opinion.
This next question by Mr. Chetan, he's asked, hi Sunil, can we invest in any mojo stock company from the list? Do you have a personal strategy for mojo stock picking?
So no, I always prefer to take a portfolio approach rather than taking a single individual company approach. Reason is very simple because sometimes one company may do well and one will not do well, and it's very difficult to know which one would do well. So I always take a portfolio approach. I would request you, please take a portfolio approach rather than having a single stock approach. If at all you want to take a single stock approach, then look at stock of the month. I would prefer that way. So I know some investors who have made good money by investing in stock of the month as a portfolio. So whenever we recommend buy, they will buy that company. Whenever we ask for exit, they will exit, create liquidity for new stock of the month. And their portfolio is done reasonably well in this choppy market. And so they're extremely happy. So again, even for the stock of the month, I would suggest take a portfolio approach rather than single stock approach.
Okay, going forward, this next particular question by Mr. Arora, he said it's very painful when you suggest sell off a stock, but when it's lower than its purchase value, how do we avoid this particular phenomenon?
Come again.
He says it's painful when you suggest selling a stock when it's lower than its purchase price.
I understand it's a painful, but it's a good strategy. Why did you hold on to a company which is not going to perform well going forward? To just do a simple analysis. You have your own personal portfolio. Look at how many companies you are owning in your portfolio. Okay? And they are incurring the losses for how many years? You are holding that company in an eternal hope that company will make money for you. But the fact of the matter is that company is not doing well. So what's the point holding that company? Because you will keep incurring losses. It will continue to underperform. It makes little sense to continue to hold that company. So remember, sometimes this strategy doesn't sound logical, but it's the most profitable strategy. And that's why I keep reminding investors Peter Lynch quote, do not cut flowers, do not water weeds.
Okay, Mr. Sunil, that's it with the Q&A session for today.
So this was the report card of India Inc. It did extremely well. March 2022 numbers, when you look at it over March 2019 numbers as a year, fantastic growth. Almost more than double the net profit. Okay, and that shows the resilience of India Inc. And that makes me believe that India Inc. should do very well. And if that is so, Indian equity market. If you really wish to ride India Inc. next wave of rally, please come and join Markets Mojo. 14,999 for 27 months. Why such a low price? Because we are celebrating our 7th anniversary offer, which works out to 550 rupees per month and less than 20 rupees per day. So I'll again request my colleague Jason to please drop the link. With this, over to you, Jason.
Yeah, thanks a lot everyone for attending today's event. There's a particular banner just below the video to purchase the offer, and I'm also going to send you a particular email on the same. We are having an event tomorrow about the Fed meeting, and as Sunil Mr. rightly said, it would be a really exclusive event. Looking forward to seeing you all come for the event. I'll be shortly sending reminders for that. Goodbye and have a great evening. Thank you so much.